Hello, everyone. Uh, Welcome to our webinar regarding on strategies to maximize your UK buy-to-let investment yield in 2023. It's a very popular topic right now. And before we just get into the topic, here's an overview of who we are at GetGround. So let's talk about a little bit about who we are. We are an all-in-one UK property investment platform with over 1.2 billion transacted in UK properties. With currently over 20,000 active customers and partnership network of over 1,400, we are active in UK, Hong Kong, and Singapore. And we are looking to bring you a full service regarding on your property buy-to-let investment. So let me introduce myself. I've been working in the UK property markets for 5 years, helping many clients in Hong Kong to grow their property portfolios in the UK market. And I'll be joined by Andrew, who will be speaking later, our senior mortgage consultant, who will be guiding you on how to do your financing for your property investment. Let's give you a quick overview of what we can do for you as a GetGround. We have 3 major products at the moment. With GG Search, we can source your investment of your property through your personal property consultants, which is myself, and along with other colleagues as well. And on our platform, we'll give you investment grade opportunities that's situated across the UK in high growth areas and investment hotspot as well. Secondly, with our GG Mortgage, we'll help you to finance your investment with a competitive rate in a very fast time, whether you're in UK or overseas in Hong Kong or Singapore. And lastly, with a GG Company, our main product, we'll manage your investment by creating a tax-effective limited company structure. We'll handle your tax returns, legal documentations, and along with your business account to take in your incomings and outgoings. So in today's agenda, we'll go through the general figures of our buy-to-let markets in UK and what is currently happening in the property market. Then we will look into why people are investing in the UK buy-to-let market right now, and an insight of a rental growth and house prices changes in major cities in UK. We'll also go to the things that you need to know about the property investment in UK for buy-to-let, and lastly, the strategies that can be undertaken to maximize your yield for your investment. So in terms of the figures for buy-to-let in UK at the moment, there are 4.4 million private rented households currently, which give a significant demand in the buy-to-let markets. And there's over 68% of an average house price growth in the last 10 years, with 4.75% average rental yield. This gives a really good investment with a decent returns. Yeah. And let's go on to the overview of what is happening in the market at the moment. There's 3 major news recently that's happening. First of all, from the mortgage introducer. According to the Supla, the inquiries on properties grew by 12% this month, which is a very good indicative of the growing hope in the property market right now. Investors are still benefiting from the discounted property price while being able to lock in their reduced mortgage rate currently. And the second is from the magazine, the intermediary, the property discounted price, first time since 2012. Buyers now are benefiting from a highly discounted property price by 4.2%, or £12,125 from the original price, because of the buyer's market, which means it's a really good timing to come into the market right now. And lastly, from the Financial Times advisor, the portfolio investors are staying in the market right now. From the news, we can see that portfolio investors who understand the long-term benefits of property investment are designed to stay in the market because of the coming high rental yields and the potential capital gain in the UK markets. So here's the latest news of what is happening in the UK market. In the next slides, we'll go through the benefits and on why people are investing in the UK buy-to-let market right now. First of all, people can benefit from a buyer's market. So investors can benefit from a much discounted price to increase their equity of your investment right now. Both developer and landlord are willing to negotiate their price at the moment, which we don't see in the past few years. And as that investment buy-to-let, it still have much more to offer. First, a regular source of income, plus a potential long-term yield from any increase in your property value. And with the high inflation in UK right now, buy-to-let, the rent prices tend to adjust it in line with the inflation, which is very good for overseas buyers because the rent is increasing, which means your return on your investment is increasing as well. And also, because of the undersupply of houses in UK, there will be a strong rental market, and in the coming days, there will be a strong house prices growth as well. So houses are easier to rent and easier to be resold. So from the statistic, we can see there's currently a shortfall of new builds in the UK at the moment. The UK government just announced that they need to develop over 300,000 new homes each year, but there's only 216,000 that has been built. So with this huge housing gap, there will be a lot of expected to be a growth in supply and demand between. So that's the reason why the rental and the house prices will be growing in the future. Yeah. So now we are looking at the rent and the house prices. So from Zoopla most recent rental report, we can see there's a rent in the major cities are growing in double digit. And it has been growing rapidly in the last couple of years. Especially if you're looking at the figures right now, we can see the rental growth in London, Manchester, and Edinburgh has been growing one of the fastest in the last 2 years, meaning there's a high demand in rent for those in the major city where it is less affordable. And the house prices from the Rightmove Index 2023, we can see the north of England continues to perform better than the south in 2023. We can see that in the figures in the northeast and northwest, there's a slight increase in house prices year-to-year growth of 0.3 to 0.6%, comparing to the drop in house prices on the southwest and the southeast from 0.6 to 1.6%. This is an indication that investors and home buyers are more committed to the north region, where the houses are more affordable. So together with the house prices and the rental, we can see that the rental yield are coming much more higher, which is really beneficial for the investor in the future. And now, after knowing the general market what it looks like, we have to go through the details. So how the property investment works in the UK and the things that you need to know. we talked about the area of where we can invest into by looking at the figures. But there are all four things. First of all, if you're looking into areas, what sort of property type is suitable for your investment? Secondly, do you understand all the expenses for your purchase in UK? And thirdly, how much time do you need to put toward your investment? And lastly, are you able to secure your financing? So in order for the first part, so in terms of your investment, you have to look at the areas. For example, if you're looking at the student areas, where the houses with more rooms will be easier to rent because their students tend to rent together more. And in contrast, in areas with more young professionals, one-bed flats or two-bed flats may be more interested by the investor because it will be more easy to rent it. Secondly, the expenditure. It can be put into two parts. While you purchase and the running cost after you purchased it. So when you purchase it, there will be stamp duty and solicitor fees, which we can go through in the next slide in more details. And in terms of the running costs, that you need to understand the basic property development costs, such as a service charge, ground rent, furniture costs, and all the costs that you're running it. Thirdly, for the time, because it's time opportunities. For buy to let, it can be very time consuming when you're looking for a letting, try to find something to choose your estate agents to rent out your property. We can help you on finding a letting management company to support you on that. And with a GetGround company, everything on your investment can be run more smoothly as well. And in terms of financing, our senior mortgage consultant, Andrew, he'll give you strategies on how to expand on that later on. And the next slides. Yep. This is an example of an investment cash flow that we will provide. So what we do as a property consultant is we will suggest on the development and the areas that you can looking at. And after that, we'll give you a really detailed investment cash flow in terms of your investment, which will be similar to something like this. So we can arrange a private one-to-one consultation later on regarding on your needs and what you're looking for. Then we can provide you with one of those. So what this actually gives you is this gives you an annual gross rental yield on your investment, along with all the costs that will be associated with your investment on your property. For example, your mortgage repayment, service charge, ground rent, letting management, etc. Then you will give you a net rental yield. And in addition to this, we'll give you a prediction on the capital growth of your property value. So together combined, we can give you an ROI of your total investment based on this investment cash flow for the development that you have chosen. So this can be given to you in more details in our one-on-one private consultations. And lastly, the most important of all, the methods to maximize your yield on your investment. There are three ways that you can do that. First of all, the limited company structuring. With a GetGround company structuring, we can help you by giving you a better tax efficiency for more profit. So meaning that decreasing your cost of investment. Secondly, the cost reduction. And how we can do that? First of all, we give you a guide on the important to look at when you're looking to choose a property and what are the necessary costs. For example, most recently, there's a leasehold reform in UK that the new apartments no longer need to pay for the ground rent. But for the older second-hand apartments, they still need to pay for it. So that would be something that you'll be looking at. Secondly, when you're purchasing the property, normally there will be a stamp duty that need to be paid. But there's also an alternative. If you're purchasing through a company, then you may not have to pay your stamp duty. And this is a huge cost reduction because stamp duty is one of the major costs that you need to pay when in your purchase. And in terms of the maximizing your yield, short-term lend will be a very good option right now because there's a growing demand in UK at the moment. According to Visit Britain, the data, it suggests that there's a huge recovery on short-term rental sectors, with the demand for night in short-term rental property growing higher than 2019 right now, which is a really high level. And the hotel occupancy rate at England level remains stable in 2013, suggesting there's a shift in the total accommodation market toward the short-term use, to short-term rental use. So this will probably give you better ideas on how you can maximize your yield by looking at short-term rental and reducing your cost by setting up your limited company and other means that we can give you a more detailed advice later in private one-to-one consultation as well. And now I'm going to pass it to my colleague Andrew, who can give you strategies to maximize your yield on your mortgage financing. Thank you.
Thanks very much for the intro there, Calvin. So I'm just going to have a chat with everybody today around how we can use mortgage financing as a strategy to maximize your yield. Great to have the opportunity to speak to clients overseas today. We do find a lot of our clients are from Hong Kong and Singapore, and we do find that a very common misconception is actually that because you're not living in the UK, you're not eligible for a mortgage, whereas I'm here to tell you that actually we've got several mortgage products available in whichever country you're residing in, okay? So what I'm going to do is I'm going to go through two different examples with you today, one of which is going to be what it would look like if you bought a property in cash, and what about if you used those same available funds to actually mortgage the property, and instead of having one, having two properties, and what that will look like from a perspective of your cash flow. What's it going to look like from a perspective of your profit that you're going to make on the properties over time, and which is, a more, another option for you, basically. So the property purchase price that I'm looking at is 144,000, and I've actually taken a property that was on our marketplace fairly recently. Okay, so these are the actual realistic purchase prices you can expect. The rent is exactly as you would expect, and the mortgage interest rate as well has also been modeled off of mortgage products that we've had recently as well. Now, when it comes to stamp duty, land tax, I have put in an estimate there of what we believe the stamp duty to be. However, as Calvin mentioned earlier, I would always suggest you speak to a tax professional. It may well be that you don't need to pay as much stamp duty. It may well be that you may need to pay a little bit more. That does differ on where you are in the world when you're looking to buy, and it also depends on how you're structuring it through a company as well. So that is just an example that is on there. Okay, so if we look at this property purchase in cash, we've got 144,000 property price, bringing in a gross rent of 12,000 per year. We've got the property costs on there. You've got your cash flow coming in at £10,820 with an investment yield of 7.13%. What you can see on the right-hand side is the capital gain over time. Okay, so this is what we anticipate your property is going to go up by on an annual basis, and using 4% is quite a conservative figure. Okay, we have seen over the last few years that actually 4% is probably a little bit low, but we like to look on the worst case scenario just to give you a true representation. So you can see after 5 years, we're looking at a capital growth there of around 23,000. After 10 years, around 61,000. And after 25 years, which is the average time people keep a property for, be around the 232,000 mark. Just below that, you can see the profit as well. So it would take, it wouldn't even take 10 years for you to double your money effectively when it comes to the investment. And after 25 years, you're at sort of 5 times your investment. So if we move on then to the next scenario, this is what it could look like if you bought 2 of those properties, but with mortgages. So we've got the property purchase price there of 144,000. We've obviously got 2 of those now. We've got your stamp duty costings, we've doubled that. And the other associated costs, which includes sort of your legals and bits and pieces like that, that's also been doubled as well. We're looking at a loan to value of 60%. Now, 60% is kind of the industry standard to be receiving the best possible rates. Okay. And we've got a deposit required on there of £115,200 in total. Your total investment, when taken into account the other costs, is coming in at 138.40. So as you can see, in terms of that versus buying in cash, you've got about 14,000 left in your pocket by going through a mortgage process anyway. Obviously, the yield is exactly the same. The rent is 12,000 per annum per property, but obviously you're going to have 2 of these, so it's 24,000. Mortgage interest rate, we've kept exactly the same there at 6.79%. And so the interest payments on that are coming in at £11,733. Obviously, we've doubled the property costs because there's 2 properties. But as you can see there, the cash flow is coming in at £9,907, which is an investment yield of 7.57%, which obviously a little bit more than in the previous example. The interesting thing, though, really comes when it comes to property growth. Now, a lot of people are in the property, in the property world, trying to invest in property because they want to really benefit from long-term wealth. And that's where the capital growth element really comes in. Again, on the right-hand side there, if we're looking at the capital gain at 4%, over 5 years, your capital gain would be around 46,000. Increasing to 122,000 after 10 years, and a massive 464,000 after 25 years. And you can see from the example below that as well, in terms of how quickly you double your money. After 10 years, you're at sort of around 1.3x, where on the first example, whereas after 10 years, you're at 1.9x if you had 2 properties there. And don't forget, this is with you putting down even less money than you would have done on the cash purchase. So really, it does make for interesting reading. So if we move over then to the next slide, please. How do they compare? So what we've got there is a proper breakdown of all of the different elements. So you've got your property purchase price, as I've said, exactly the same for both scenarios, only that you're buying 2 of them in scenario 2. We've got your stamp duty doubled. You've got your other costs doubled between scenario 1 and scenario 2. Your loan to value in scenario 1 is at 0% because there's no loan against that property. On scenario 2, it's at 60%. And as you can see, in terms of your total investment in scenario 1, you would be putting down around 151, nearly 152,000, whereas that figure is actually only 130 in scenario 2. So there's a fair chunk of money left in your pocket when you consider all the costs involved. You've got a yield on both of them at 8.4% with a mortgage interest rate of 6.79 is what we're looking at there. And as you can see, the investment yield at the bottom is slightly better on the second scenario with the financing. What you can actually see from the right-hand side there, that sort of highlighted column there in purple saying year 5, is actually, you need to factor in as well that the rents will go up over time. So again, this is based on a 4% increase over time. And you can see that after year 5, the gross rent for having 1 property probably would have gone up from 12,000 to around 4,600. Whereas actually, if you had 2 properties, you're benefiting from that rental growth across 2. which means it's gone from 24,000 up to 29,200. And the investment yield, which you can see at the bottom, is the biggest difference there. So you've got an investment yield which has gone from 7.13% when you're buying in cash to 8.84%. But actually, if you had the two properties with the two mortgages, you've gone up a massive amount from 7.57 to 11.55. So you can see that your investment really starts working harder for you over time, which is kind of what you want from a long-term property investment. Again, just another comparison side by side here. We've got the capital gain. As I said earlier, we're basing it on a 4% annual increase. Okay, so after 5 years, your profit will have gone up from £23,000 there or thereabouts. If you were to own one property, it would be around the 46 mark for two properties. And you can see the real huge figure after 25 years there. If you just stuck with that one property that you bought in cash, you'd have a profit of roughly around 232,000. But had you spent actually less money, you'd have profit of over 464,000. Okay, so actually by having two properties and spending less money overall, you're better off long term just by utilizing some of the funding and financing. And one of the key things to note here is actually this is based on a mortgage interest rate of over 6.5%, which is kind of the norm at the moment, but it certainly hasn't been the norm for the last sort of 15 years. If you look back over time, mortgage interest rates for limited company mortgages for clients overseas was probably closer to 4.5%. And so if in the future, over the course of the next 25 years, we were to go back to similar rates to that, the actual gain would be even higher for that of the mortgaged properties. Okay, so what we're going to do now is we're going to open the Q&A up. Okay, so at the bottom of your screen in the Zoom meeting, you'll see a little section that says Q&A. Okay, what me and Calvin will do is we'll go through those questions and answer them as best as we possibly can. Just a heads up, we cannot give you any sort of tax advice or mortgage advice in this forum at all. But what we'll do is we'll go through the questions together, and whoever the question's relevant to will give their best answer on that, okay? And we'll try and get through as many as we possibly can today. Yes, so we've got a question here from Ginny. So Ginny, thank you for your question. You've said, as you're introducing a mortgage product, can I consider GetGround is playing the role of mortgage broker? Really good question, Ginny. So we do actually work now with 5 different lenders, okay? And those lenders specialize in limited company buy-to-lets. And we have a number of those lenders that are lending to clients overseas, whether that be Hong Kong, Singapore, Dubai, all over the world. So yes, absolutely, we can help you with your mortgage needs. So if you do have a question, feel free to fire away in the Q&A section. We'll be happy to answer those. Okay, so that's a question there around UK property. So I'll let you have that one, Calvin.
No problem. Thank you for your question, Dean. So your question would be, why would the UK be a better investment rather than putting my money in Hong Kong? Well, first of all, because UK market actually offer much better rental yield at the moment. So we can get at least 6 to 7% rental yield in north of England at the moment. And in contrast to Hong Kong, the rental yield would be much less compared to what we're having in UK at the moment. And when you're looking on the long-term perspective, a UK market actually gives you really steady growth of house prices. So when you, in terms of capital gain and rental yield, you can get really stable investment in UK right now. Hope this answered your question, dear.
if you don't mind, Calvin, I'll take that other question from Ginny there. So Ginny's asked, do lenders have a special requirement regarding income record? So in answer to your question there, Ginny, the lending is based purely upon the rent. Okay, so the rent needs to fit within a stress test with the lender. Now, sometimes the lenders will have a minimum income requirement. So that's an income that they like to see in the background. Okay, now this may be £20,000, it may be £50,000. So what I would say is if you've got a scenario that's maybe outside of the norm, it's always worth booking in, and you can book in through our website for sort of an initial consultation to have a chat through what you're looking to do and how feasible that might be, okay?
Thank you, Ms. Chow, for your questions. Why there is no property tax in your example? The reason being is because tax is quite a complex questions to be answered with. So it's better to leave with the tax advisor who can give you proper right advice regarding how much you need to pay tax on, as it varies on how you make a claim. So I think this can chat with a private tax advisor in the later stage of your investment. Hope this answers your question as well. And yes, one of the attendees asked, can I have an in-person meeting with me in Hong Kong? Oh, definitely, because I'll be based in Hong Kong for GetGround. As you may know, we're a UK company, but we do have an office in Hong Kong and Singapore as well. And me personally, I will be based in Hong Kong. So feel free to find a time for a meeting with me in Hong Kong. We can do a face-to-face in-person meeting as well.
Okay, we've got another mortgage-related one in the chat there. How are mortgage rates looking for international investors at the moment? And is it worth it with the current rates? So as you can see from the examples that I gave there, I was basing the mortgages at 6.79%, and it was definitely worth still looking to proceed. As Calvin mentioned when he was speaking, it's actually a great time to secure a discount on properties because of the market we're in. And actually, even if you are paying a little bit more on the mortgage side, it's very likely that you'll make that up with the discount that you're receiving when buying the property. And in terms of the rates at the moment, that 6.79 is fairly consistent with what we're seeing in the market. I think the lowest rate that we would have available for clients overseas at the moment is around 6.2, 6.3%. And we've got another one, mortgage related from Bess. Bess has asked, what's the minimum income to apply for a mortgage? So with some of the lenders that we use, there is no minimum income requirement, providing that the rent fits. However, with other lenders, which may offer more competitive rates, there's usually an income of either £30,000 or £50,000. Okay.
Thank you, Peter, for your question. Your question is, GetGround is to use one limited company to hold one property. In short, yes. But we do also offer a holding company that can hold subsidiary companies to hold one property each. For this question, we do have a more company setup consultants that can get back to you on that question as well to give you a more depth. So feel free to book a one-on-one meeting with us, and we can give you a more detailed answer regarding on your question on this one.
Hey, so somebody's popped in the chat there. What's the charge for buy-to-let mortgage advice? So as it stands at present, we do not offer advice around which mortgage is most suitable, but we do help you arrange the mortgage. Now, our fee for helping arrange the mortgage is £799. £300 of that is paid when you've got your mortgage offer. and the remaining 499 is on completion. So if for any reason we can't get you to getting a physical mortgage offer in your hand, there's absolutely no fee to be paid. And then we've got another mortgage related one just after. What's the minimum loan to value? I think you may mean what's the maximum loan to value. So we offer mortgage loans all the way up to 70% loan to value. So that's a 30% deposit for clients overseas. And which lenders do we use? We use currently Oak North, Octopus, Molo, Skipton International, and Raw Capital. Okay, so did you want to grab these next ones, Calvin, or do you want me to?
Yeah.
No problem at all. Okay, so somebody in the chat there has asked, is there a way I can manage my UK properties while still living in Hong Kong? Yeah, absolutely. So there are companies out there that are readily available as sort of letting agents, managing agents, okay? And what they can do is they can make sure that the rent is collected on time every month. They can also check that you're keeping up with any sort of legal responsibilities. So, you know, making sure the fire alarms are all up to date, making sure the electricity has been tested, that type of thing. So, yeah, there are absolutely different ways that we can help you with managing your UK properties whilst living in Hong Kong. That's no problem at all. Got another mortgage one here. With changing mortgage rates in the United Kingdom, do you think it'd be better for me to wait before I invest? Interesting. We get this quite a lot. And I'll refer back to a couple of the questions that we had earlier in my answers there. If you were to wait for the rates to get better, it's very likely that you'd have less opportunity to negotiate a discount on the property price. So the way that it generally works is the lower the rates, the more demand there is out there for property. The more demand there is. So you may need to pay more for that property or at least asking price. Whereas if the rates are a little bit higher than they have been previously, some people are put off by buying. And so there's less competition there when you're putting in your bids on the properties. So actually, with high mortgage rates, it can be a good time to get into a property at a lower price and then vice versa. So I would say there's never really a bad time to invest as long as you plan on staying in the market for quite some time, which most people, when they're looking at property investment, do plan to stay in it for quite a while.
Question from Charles. What is the cost of setting up and running a limited company in order to hold the properties? What is the stamp duty for a limited company to purchase a property? So in order to set up a GetGround company, there's a setup fees of £579 plus VAT, a one-time setup fees. And in terms of the running cost, there will be a monthly subscription fees of £21.98 plus VAT as well. And this including the managing on your tax reporting and your legal documentations and opening your business account as well.
And regarding the stamp duty on that, I think you're probably best off speaking to a tax professional when it comes to the stamp duty side, as we cannot give any stamp duty advice, unfortunately. There's a question in the chat there, Calvin, which I think is probably a good one for you to answer is, what's the current hotspots in the UK for investment?
Current hotspot in UK, in terms of the rental yield and the potential capital gain that we're looking at, the easiest choice at the moment will be Manchester. Given that Manchester has a really good statistic at the moment, has consecutive years of double-digit growth in terms of the rental yield. We do have a development that is completed in Manchester that is offering over 6% of gross rental yield in terms of the rental for your cash flow. And in terms of the capital gain, because of that, there's lots of regeneration in Manchester that's happening as well. So you can see that the capital gain in the past few years, Manchester has been doing quite well. So I would suggest in order to look at the hotspot in UK at the moment, the first city that we can look at is Manchester. Then if you're looking for something that is more on the subsidiary side, on the outskirts of areas, then we can go through it in more details of your preference would be. And we can offer something that is up to your choice.
So I'm just going to answer one or two of these mortgage ones that have just popped up. So, how much cash would I need in order to buy a property in the UK? We usually say at least 30% of the property value. Okay, and then you could get a mortgage for 70%. If to make sure that you get the best possible rates on the mortgage, I would say you want to put down 40% deposit. Okay. Another one here relating to the example I gave earlier as well is it common to buy two properties with a mortgage at the same time? Is it easy to get the loan? And will the second property have a higher mortgage rate? And what's the minimum income requirement of getting 60% loan to value? So loads of good questions in there, actually. Is it common to buy two properties with a mortgage at the same time? When it comes to landlords, actually, yeah, it's quite common. We tend to find that if people have, I don't know, invested a chunk of money, or if they've had a chunk of money come from their pensions, they might want to deploy all of that at one go. I've certainly done several applications for clients at the same time. It's usually not a problem. To be honest, some mortgage lenders actually quite like it because they can underwrite both the cases at the same time, and they've got a full idea of the structure of how you're going to run them. Makes their life easier because they're underwriting two loans for the same person effectively. Will the second property have a higher mortgage rate? No, the mortgage rate will be the same for both, unless, of course, the loan to value is different or the actual way that you want to structure it is different. If it was two properties that were almost identical, it would be exactly the same rate on both. And the minimum income requirement, as I mentioned earlier, there are some lenders that are as little as no minimum income, providing the rental fits. And some go all the way up to around £50,000 of income. And they offer maybe slightly better rates.
I've got a question from Peter. What if we use one limited company to hold multiple properties? In terms of GetGround company, we would have to use one company to hold one property at the moment. If you're looking to hold multiple properties, we do offer solutions that with a holding company having several different subsidiary companies that hold one property each. This actually gives you a benefit of having easier to managing your business account in terms of the taxation reportation, and also is also very easy, make it easier for you to resell the property as well. Because when you're reselling a property through a company, rather than just selling a property, then the buyer do not need to pay for the stamp duty. That will make it a more cost-efficient way for the buyers to just buy the company on that side. Oh, there's a question that do we have properties all over the UK or just in the south? Yes, we do offer properties that is in England, so in the south and in London and in the north as well. So it depends on the location that you're looking at. We do offer different properties all over the England.
So we've got a question in the chat there around what's the difference between personal ownership and company ownership? So that's quite an interesting one. Certainly from speaking from a mortgage standpoint, if you were to buy a property in personal name, you would be very, very limited to what mortgage costs you could offset for tax purposes. Whereas in a company name, your scope for offsetting some of the expenses against your profit is much, much greater. So it can be more tax efficient to buy through a limited company. And what we can do is, if it's something you're interested in, we can book a consultation with one of our company specialists. What they will do is they'll be able to run through a breakdown of why people use a limited company to purchase buy-to-lets through. And we have actually found that over the last few years, since legislation changed regarding taxes, that around 60 to 70% of all new buy-to-let transactions are done through a limited company. So it's definitely the popular route to go at the moment. We've got another mortgage one here. So after 25 years of buy-to-let mortgage, would I only have to repay the principal? And will this have any benefits for inheritance distribution? So in regards to the inheritance part of this question, I would suggest that you speak to a tax advisor around that, because I'll be honest, it's not my specialty, inheritance tax. But in regards to the mortgage, most of the mortgages that we offer to our clients are interest only, which means you'll pay the interest each month. And at the end of your mortgage, you're expected to pay the capital element. Okay. The capital element can either be paid by selling the property, by paying it from savings, or from remortgaging other properties to clear it down. And it doesn't necessarily have to be 25 years. There are mortgage providers out there that go as high as 40 years now. Okay.
A question on with new build property, how would I know my investment is safe if they aren't fully built yet? What we do as a GetGround, we have taken it very seriously on the due diligence side. So for every property development that we take into account, we will first go through the financial and make sure that fire safety and all the criteria is met before we actually take in the development. So we will ensure that your investment is safe when you're looking at new build or off-plan. And another question is, can I open a company from Hong Kong without UK passport? In short, yes. There's no restriction on where you are in order to set up a company in UK.
Okay, so we've got somebody asking there if, oh, sorry, Calvin. Got somebody asking there if the property's for Airbnb, does it fit buy to let? Yeah, we do have lenders available for short-term let properties. So Airbnb is absolutely fine business model. We usually say that if you are not sort of residing close to the property, it might be worth getting a management agent involved, as Airbnb can be quite time consuming. It can be managed from anywhere. But what we do say is that, you know, because you've got a high turnover of people staying in the property, and you've got to manage things like cleaning of the property and things like that, you might want to get a managing agent. But absolutely, we have lenders available for Airbnb. There is no problem there.
A question on if I already have a company at GetGround. I'm planning to buy a few more properties in the next few years. How can I change it from one company to the package that you have mentioned? Yes, we can do that. When you already have a company at GetGround, you can also set up another company with holding company and a subsidiary company. In more detail, we can pass it to a company specialist that can give you a more insight on how it can be done. Yep, got a question from Leo regarding on will GetGround company can help if the tenant fail to pay monthly rent? And can you explain more details about Section 28 protecting tenants more than the owner? As a GetGround company, will help you managing your business account on the incoming and your outgoings, and including your tax reportation and your legal documentation as well. Regarding on the monthly rent, it will normally be dealt with by the letting management company that you're working with. So if the tenant failed to pay monthly rent, you should go to a letting management company that you're working with, and they should assist on that. And regarding on the Section 21 question, the letting management company will also do that for you as well.
So Anonymous has asked, when money's saved in a GetGround company account, do I get any interest on that? What I would suggest you do, if you've got any questions around the GetGround company accounts, is once again, probably have a chat with one of our account managers who specialize in this area. What they'll be able to tell you is what that GetGround company account actually looks like, what you can do with it, and what benefits you're going to get from that when you open a company with GetGround. Okay. So that is all of the questions. Thank you everybody for joining the webinar today. I hope people have found it useful. You can book into my diary through the website, and if you go into the chat section, I believe there is also a link in there to book in with Calvin. Calvin, have you got any final words before we leave this call today?
So thank you for attending our webinar today, and I hope we can help you on your buy-to-let journey. So feel free to book a meeting with me privately, one-on-one consultation regarding on what you need for your investment in UK. So thank you.